Okay, so for this video, I wanted to go over the Schedule K-1 for a partnership Form 1065 return. I get a lot of questions on these Schedule K-1s because taxpayers get them and they kind of don't know how a lot of these numbers are arrived at and what information is reported on here. So I'm going to briefly go through the Schedule K-1 itself and then actually take a look at the return for the partnership so you can see how some of these numbers, right, in boxes 1, 5, 6A, B, and so on, how are these numbers originally reported on the return itself and then ultimately allocated out to the owners. So, so we'll start with some of the high-level pieces to this schedule. Might be a bit obvious, but just for completeness, we'll go over them anyway. So to start in the top left section here, so Schedule K-1, Form 1065, this is a Schedule K-1 for a partnership return, right? Form 1065 is the partnership tax return filing. And that's important because there are Schedule K-1s for other entity types, right? Schedule K-1 can also be issued for a S corporation. So an S corporation, you would see Form 1120S. And they also exist for trusts, right? So an irrevocable trust that files a Form 1041 tax return every year. It also has Schedule K-1s that are issued to the beneficiaries. So if you're a beneficiary of a trust and you receive a distribution during the year, you'll get a Schedule K-1, and it'll indicate under here a Schedule K-1 for a Form 1041, right? That's a distribution from a trust. Okay, and so 2020, obviously this is the tax year. Part 1 is information about the entity itself, so the partnership, right? You've got the partnership's EIN, the name, an address. Part 2, this is going to be the information unique to you as the partner. So every partner in a partnership gets a Schedule K-1. It doesn't matter how small of an ownership interest you have, and the reason for that is partnerships do not pay taxes directly, right? They're pass-through entities for federal tax purposes, and so ultimately the owners are responsible for reporting the income on their return, paying the tax, whatever the effective tax rate is, essentially at their personal level. So in this example, for John, he owns 60% of this company, and then the other owner owns the other 40. But you do see, particularly in the publicly traded partnership realm, where you'll have investors that have 0.0002% interest in the company, and that's because there's tens of thousands of partners in these publicly traded entities. Okay, so back to the information about the partner. The partner's tax ID number is in line item E, right? So if you're an individual, this will be a Social Security number or an ITIN. And then if the partner down here is an entity, you'll likely see an EIN in there, or if it's a foreign entity or foreign person that doesn't have any kind of tax ID number, line item E might report foreign. So if you spell out foreign for the partner's tax ID number, that's sufficient to indicate to the IRS that this is a non-resident individual or a non-resident entity, and so it doesn't have a tax ID number. Line items G here indicates, in what capacity is the partner involved in the partnership, right? So if you're actively engaged in running the business, you likely be an LLC member manager. In this case, John is. If you're just a limited partner or like a passive investor, so you contributed capital to the company, but you don't actually do anything on a day-to-day basis, you're just a regular limited partner or an LLC member. And then H1 is domestic versus foreign. Again, pretty straightforward. Domestic just means, is this partner a U.S. person? So is it a U.S. individual? Is it a U.S. company? If so, then it's a domestic partner. Everybody else is foreign. I-1, what type of entity is this partner? There's a variety of different classifications here, right? Are you actively engaged as an individual, or are you passive? There's other classifications for just general entity types. And then the partner's share of profit down here, right? The beginning and ending of the year allocations, right? These allocations can fluctuate during the year, particularly in like a hedge fund context or a private equity fund where you have a lot of investors moving in and out and shifting capital around. And so oftentimes the ownership percentages will be different at the beginning of the year than they were at the end of the year. Partner share liabilities. So partners are actually allocated a portion of the liabilities on the balance sheet at year end, depending on what type of debt it is. And that's important because partners, the allocation of debt to them increase their tax basis in the investment, right? And so tax basis is important because the higher your tax basis, the greater ability you have to deduct losses against your interest. And then the partner's capital account analysis in box L, this is just a reconciliation of the capital account for the year. So in this context, this is a brand new entity. So the beginning capital account for this partner is going to be 0. And then the amount of capital contributed during the year, that's the amount of cash that John or this investor put into the entity during the year. The next line item down is going to be the overall net income or loss, the net amount of net income or loss allocated to the partner. And then withdrawals down here is the actual cash distribution that was paid out to the partner during the calendar year. So again, so $600 of the capital contributed, that's the amount of cash in, and withdrawals and distribution is the amount of cash that the partnership paid out to this individual partner during the year. Okay, and then so part 3 is all the allocations of the income and loss, right? So in this one, we have ordinary income, we have some interest, dividends, capital gains, losses, or well, in this case, capital gains from the sale of securities likely. And then line 13, other deductions, 13A is code for charitable contributions. So the LLC made some charitable contributions during the year. And again, the LLC itself doesn't pay any federal income taxes. It doesn't necessarily file an income tax return, right? This partnership is an informational return. So if the partnership donates to charity, it gets to allocate those charitable contributions to the owners. So the owners would pick up this charitable deduction on their tax returns. Line 16 items, this is if there's any kind of foreign income earned within the company. And in this case, it looks like there's a little bit down here in 16F, foreign income. I think it's going to be foreign dividends is the amount in there. And then line 19A is the amount of cash distributions received during the year, right? So this number generally matches what you would see down here, right? So withdrawals and distributions, 12, 9, 16, the same number up there for line 19A. Okay, so let's jump back to, let's actually look at the partnership return to see kind of how some of these numbers are flowing through. So this partnership is a consulting company. You can see here there's 2 partners. It's an initial year return, right, because they just launched it this year. And so they had some income from consulting, $50,000. Then they have some expenses down here. And then their net income, their net ordinary income from the consulting business, right, down here, line 22 is $42,200. So keep that number in mind, $42,200. That number is ultimately reported here on Schedule K, right, the distributed share item. So line 1, ordinary business income or loss, $42,200. So this number is sourced to that page 1. That's how we arrive. That's how we source this number, and then ultimately this piece is allocated amongst the partners on their Schedule K-1s. Okay. So let's go down the list here, a couple other items. So interest income, the LLC had an interest-bearing bank account, so it earned $75 in interest during the year. The LLC also has a brokerage account, so it earned some dividend income, right? $600 worth of dividends, and $200 of that is qualified. And that's important because qualified dividends are subject to the long-term capital gains rates. Right, so generally, dividend income, non-qualified dividend income is just subject to ordinary income tax or whatever your marginal rate is. So if you're watching this and let's say you're in the 37% tax bracket, any kind of non-qualified dividend is just going to be subject to 37% in taxes. If you have qualified dividend income, you pay the long-term capital gain rate, which is at the 20%. So in a partnership that's earning dividend income, it's very, very important to separate out what's qualified versus what's unqualified, because at the individual level, the qualified dividends are going to be subject to substantially less taxes in most cases. Okay, so lines 8 and 9A, capital gains, right? So they had $400 worth of capital gains during the year. If we jump forward, these are originally going to be reported on Form 8949, then Schedule D, and then it's pulled here, right? So if we jump to 8949, sales and disposition of capital assets. This LLC was trading some Apple stock during the year, so they bought Apple stock, bought it for $3,100 and went up a little bit. They sold it for $3,500, and so they had a $400 gain, right? And it is, yep, so it flows back there. $400 worth of gain, $400 reported on line 8. Pretty straightforward. And then line 13A, these are the contributions, the charitable contributions. Recall, we saw this number also on we saw this line item on the Schedule K-1, right? The amount of charitable contributions allocated to the partner. This is the total for the whole entity, right? So the $400 is the total at the entity level. And then when we look at the partner's K-1s, each partner gets an allocation of this total. Right, so in John's case, he was a 60% owner, so he gets 60% of all these items that we're seeing here. And then the foreign transactions, this is used to report the amount of foreign income that's earned within the entity. And these numbers are important because ultimately they are carried over to the Schedule K-1 for the partner. And then the partner uses that information to compute their eligibility to take a foreign tax credit. So down here on 16P, there was $60 worth of foreign taxes withheld. And for those of you that have stock brokerage accounts and trade securities and have dividends, you'll note that when you get your 1099 every year, you'll see that you'll have some foreign taxes withheld. Depending on what kind of securities you're trading. And so that's what this is in effect, right? So you had some dividend income come in, and a portion of that dividend was foreign source, and so the foreign source country took out some foreign taxes, $60 in this case, which you can ultimately, when you fill your 1040 out, you can attach a Form 1116, try to take a foreign tax credit for the amount of taxes that were withheld on the dividend income. And in the other information section, line 19A, distributions of cash, right? This is the amount of cash, again, that was distributed out to the partners during the year. And you'll note that on Schedule K, there is no line item to show how much cash was contributed by the partners during the year. That's only on the item L reconciliation for the partner. So let me go back here really quick. So down here, when we were talking about John, right, he put $600 in. The $600 that he contributes, this is really only reported here and then on the company's balance sheet section in the M1 and M2 section, or sorry, M2 section. But they're not reported on this Schedule K, on the distributed share items. Not really sure why that is, but I mean, this is just the way they developed the form. So that is the amount of total distributions out to partners. And again, that number comprises all of the cash distributed to partners. And so each partner's K-1 is only going to show the amount of cash that was actually sent to them. Okay, so the company's balance sheet per books. None of this information is really translated over to the K-1s, right? This is just part of the 1065 filing. Reconciliation of income, analysis of partner capital accounts. Again, for the purpose of the K-1, we can skip over these because it's none of this information is ultimately reported on the K-1s. The totals will reconcile to the K-1. So in other words, down here, the balance of capital accounts, $22,288, that number ties to this figure, partners' total capital accounts. And then the $22,288 figure, that'll be the total amount of capital from the Schedule L reconciliation. So down here, ending capital account 13,373. If you go through all the K-1s for every partner in a partnership and you add up this ending number for each of them, the total will tie to this balance here, right? The 22,288 and there. So that's how all those kind of numbers intertwine. Okay, so if we go back to the K-1, just so we can kind of see, how these ultimately flowed through here. The ordinary business income or loss, that figure, that's John's allocation of line 1 from page 1 and then line 1 from Schedule K, right? So line 1, ordinary business income, this is what John gets. And that number is pulling from here, right? The 42,200, that's that line 1 number. John gets 60% of that. And that's also the figure here, right? So 60% of this balance is what's being reported on the Schedule K-1. And then the same corresponds for all these other values here, right? So we have 5A, 6A, 6B, line number 8. All of these balances are John's allocation, so 60% of the numbers that you're finding here, okay? So not too confusing, just it's just important to remember that when you're looking at the return as a whole, Schedule K are the total amounts for the partnership, and then ultimately all of these amounts need to be allocated across all of the partners, right? So every partner is going to get their allocable share, and then if you go through the K1s, let's say you printed all the K1s and you were just going to add up, the interest income from this K1, the interest income from the other ones, the total that you add up to should reconcile with that Schedule K, page 4 on the 1065. So yeah, I think that covers all the high-level items for this. Thanks for watching, and I hope to see you again.